Hey everyone, Airbnb reported quarterly financial results, and we got yet another data point suggesting that US consumer behavior is radically shifting once again. So I'm going to review Airbnb's latest financial results in this video, share with you the data point that suggests the changing consumer behavior, and I'll also update my buy recommendation for Airbnb stock. As you probably know, it's been one of my business models that I'm attracted to, the platform business model. I really like that. It's lucrative, and you're going to see why that's the case here. And I'll share with you if I think the company is still a buy.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so in the latest quarter, the company reported revenue of $2.75 billion, which was up by 11% compared to the same quarter last year. Now, that's interesting because the same quarter last year, the company reported significant increases in revenue as well. Airbnb's revenue has been soaring ever since economic reopening gained momentum. People have been unleashing pent-up demand to get outside of the house, to travel more, because they weren't doing that during the pandemic era lockdowns. However, Airbnb noted that behavior is coming to an end, and I'll share with you more about that a little later in the video. The company generated $555 million of net income, but there were some tax differences that changed the net income calculation, so the profitability metrics were not as comparable year over year. What was most attractive to me, and what's been most attractive to me about Airbnb's business, is the lucrative cash flow it generates. Over the trailing 12-month period, the free cash flow was $4.3 billion, and that represented a free cash flow margin of 41%. A 41% free cash flow margin for Airbnb. That's a really lucrative free cash flow margin for a business that's still in growth mode. It's not done growing. It's not a mature business where free cash flow is at the peak. It's still growing, and I think it has room to expand. But this demonstrates the profitability of these platform business models that I've been really attracted to, and Airbnb has been one of those platform business models. They don't own any of the inventory on Airbnb. None of those listings are Airbnb owned. These are all listed by hosts that put their apartments or homes on the platform, and they hope to get guests to come and reserve those homes and apartments and rooms. Airbnb just takes a fee for every transaction that happens on the Airbnb platform. And as you can see, that's a lucrative business model. Most importantly, because those profits that the company generates, it doesn't need to reinvest all of it back into the business. In fact, it only needs to reinvest a small fraction of those profits back into the business, and the rest it can return to shareholders. Also, for growth, the company doesn't need to reinvest into new properties to grow revenue. If Airbnb wants to grow, it grows by by less capital intensive means, by improving the platform, improving the website, making it easier for hosts to list their properties, making it easier for guests to discover their properties by unique marketing campaigns, etc. So those are less capital intensive than having to build an entire new property, an entire new resort or a hotel for growth. And it's also less risky. And so this business model, very attractive. And I've had Airbnb stock rated as a buy for several years now. In fact, I believe in 2021, Airbnb was rated as my top stock to buy, or 2022. One of those years I had Airbnb listed as my top stock to buy. I took it off my top stock list because the stock price performed so well that it became a more reasonable valuation as opposed to being extremely attractive. But I've had the stock rated as a buy throughout this entire time. I've had coverage on Airbnb. So speaking about making hosting more attractive, in the second quarter, they surpassed 8 million active listings on the platform, driven by continued growth across all regions and market types. And if you do the calculation for how much it will cost you to buy a house in the United States and how much you could make renting that house on Airbnb in most locations, it's still a very favorable decision for investors to buy a home and use that as an Airbnb property and just rent it out. The profile for profitability is still very attractive. And so that's what's creating more and more and more listings, because people, entrepreneurs, are looking at this situation and saying, hey, we can make money on this. We can just buy a house, put it up on Airbnb, and make a living off of renting out on Airbnb. And so more and more people are doing this, and I suspect this will continue all the way until the equilibrium is reached where it doesn't make sense to buy a house and rent on Airbnb. As long as that equation remains profitable, Airbnb will continue to attract more and more listings. The other side of that equation, Airbnb has to maintain quality, and they did some of that in the latest quarter. So since April of 2023, when they upgraded quality systems, they've removed over 200,000 listings that failed to meet the guest expectations. That's one of the risks for Airbnb. When you go to a hotel or a resort, you can be confident in the experience that it's going to be consistent across the brand. With Airbnb, not so much, right? You can get a host that's really, really good and it makes the experience really fun. Or you can get a host that's really bad and it makes the experience not so fun. And Airbnb doesn't have as much control over the user experience as a hotel might have. And so that's a bit of the downside in the long run with Airbnb, although they do have levers they can pull, additionally the rating system and all of that, to improve quality. I highlighted that the company doesn't need to reinvest that money back into the business and it can return to shareholders. They did precisely that in the latest quarter. They repurchased $749 million of their stock, and they still have $5 billion remaining in their repurchase allocation. So they're likely going to continue buying back shares of their stock because they generate so much cash flow. They don't need it to reinvest in the business. One of the things they can do with it is return it to shareholders, and in fact, that's what I would prefer they do, and they are indeed doing that. So I'm happy that management is returning capital to shareholders. So far, I've talked about many of the good aspects of Airbnb, but yet following the earnings release, the stock price is down. So where is the mismatch coming from? And it's right here in the outlook, the forward expectations. In the third quarter, the company is forecasting revenue growth of just 9%, which would be a big slowdown. And they're saying that they expect a sequential moderation of year-over-year growth in nights and experiences booked. They also see signs that slowing demand from U.S. guests. So this was the reason why Airbnb stock price is down following the earnings release, is they are forecasting that they are seeing a slowdown from U.S. guests. And you've heard me talk about this for a couple of months now, that U.S. consumers, their behavior is normalizing again. For the last 2 years or so, following the economic reopening, consumers have been spending more money away from home on travel, on theme parks, on restaurants and bars, etc. And now, over the last 2 months, I've seen the ceiling on that trend. Now consumers are saying, no more. We're tired of spending money away from home. We're exhausted by all the price increases when we go out of our house. And so now we're buying and spending more time at home. And so Airbnb is yet another data point of that trend reversing and normalizing. Disney, which is another company that had been benefiting from that away from home trend, said a similar thing in its latest financial update. They said that in the third quarter, they expect demand moderation they saw in the domestic business could impact the next few quarters. So they see the slowdown in their theme park business going on for a few more quarters, just like Airbnb said that they see slowing demand from US guests. So these are several more data points that suggest a normalizing consumer behavior, and that's the reason why Airbnb stock is down. So Airbnb is now trading at a forward price to earnings of 22.86, and this is the lowest price you've been able to buy Airbnb stock for some time now. The difficulties, the headwinds Airbnb is facing are cyclical headwinds, are short-term headwinds, right? Based on changing consumer behavior in the near term. This isn't a structural slowdown. This isn't like consumers are saying, you know what, we don't like Airbnb anymore. This is just consumers saying, you know, we're tired of spending time and money away from home for the last 2 or 3 years. We've really exhausted our budgets by going out so much and traveling so much. And so we want to pull back a little bit. We want to conserve cash. We see our income growth slowing down. And so we want to be more cautious. And so this is a cyclical thing. And I suspect longer term Airbnb will return and continue its growth in its secular tailwind. So I guess you can see where I'm going with this. To update my recommendation of Airbnb stock, I had it rated as a buy coming into the quarter, and I'm reiterating that I still like Airbnb stock. I think it's a buy right now. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.